Okay guys, so in this video we're going to talk about, is Walmart stock a good buy at $124, guys? So Walmart has been one of the few companies that has actually kind of benefited from the whole global pandemic and things like that. And this is also, I think, an excellent stock to own in retirement portfolios because Walmart has increased their dividend for 47 straight years, and they're one of the safer stocks out there. Like I said, they're not a hyper growth stock, but it's a tried and true company that should continue to do well in both the United States and overseas, guys. So they just recently posted their Q1 fiscal 2021 earnings report, and I just wanted to quickly go over that. So guys, let's head into those numbers. So as we're looking here, this is basically the first quarter that Walmart has posted after kind of the whole coronavirus thing has set in. You can find these numbers on Walmart's investor relations. So as you can see here, Walmart US comparable sales grew 10% and e-commerce sales grew 74%, guys, and they posted an earnings per share of $1.40. So guys, this was an excellent quarter, I think, for Walmart in general, seeing as that a lot of retailers had been closed. I think Walmart was basically considered an essential place because a lot of their business, over half their business, is groceries. So it really wasn't possible for Walmarts to be closed, and I think a lot of people ended up stockpiling there. And a lot of people that had normally shopped at Walmart were pretty much forced to. So let's go through the numbers really quickly. So total revenue was 134 billion. Comparable sales increased 10%. E-commerce 74% with strong results for grocery pickup and delivery services, guys. So they're actually in direct competition with Amazon. So the reason I like Walmart stock a little bit more than Amazon, I like them both, but I like the dividend with Walmart for my retirement portfolio. So they also discontinued Jet.com. Sam's Club increased 12%, and international sales were up as well. It's 3%. So guys, basically Walmart is just a tried and true stock, I think very safe, and a stock that will continue to make money because you have to buy groceries and things like that. It's really a recession-proof company, in my opinion. When people cut back on spending, they're not going to not buy food. So I think it's a very, very solid company if you guys are looking for a stock to hold in your portfolio and you want to make like maybe 10 to 15% per year with very little risk. I think Walmart is a great choice. So as you can see here, he said the decision to withdraw. They also withdrew guidance though for the rest of the year. So it says the decision to withdraw guidance reflects significant uncertainty around several key external variables and their potential impact on our business and global economy, including the duration, intention of coronavirus health crisis globally, the length and impact of stay-home orders, the scale and duration of economic stimulus, employment trends, and consumer confidence. Our business, this is the CFO. Our business fundamentals are strong and our financial position is excellent. Customers trust us to deliver on brand promise. I'm confident our ability to perform well most in any environment. While in the short-term environment challenge, we're positioned well for long-term success in increasing omni world. So guys, as you can see here, Walmart's doing really, really well, and I actually hold some of these shares, like I said, in my retirement account. And the reason I hold this stock is simply because I'm going to get into it more after I go through these numbers, but I want to show you guys something really nice about the power of raising dividends. And it's something that a lot of you guys out there, if you guys are millennials, you guys in your early 20s, if you buy some of these raising dividend stocks, right now, as you get older, you're going to be receiving a higher yield on cost. So I'm going to talk more about that at the end of the video. But right now, as you can see, a look here, one of the reasons I like Walmart so much is they're really excellent at returning value to shareholders. So as you can see, over the last quarter, they paid over 1.5 billion in dividends and repurchased 700 million in shares. So these are two key things you want to look for. If a company has had to suspend their dividend and suspend share repurchases, that means they were swimming naked. They weren't really prepared for this pandemic. And the companies that weren't prepared were either the companies that weren't stockpiling a nice cash pile, like companies like Berkshire Hathaway and Apple always stockpile cash. So the companies that weren't stockpiling cash would have to suspend these two. And the second one is a company that wasn't basically responding to consumer demands. In times like these, people are going to basically cut back all but essential items. So if the companies weren't selling goods that people really, really need, they were kind of selling, luxury stuff and things like that, and not focused on core key needs. Those companies are going to have to suspend these. So these are pretty much the two key metrics that you want to follow. And anytime a company continues to return value to shareholders, even in times like this is the type of company that can basically survive almost any environment. So let's take a quick look here. Basically, I covered some of these numbers already, net sales. I want to get down into the financial statements because I think I want to show something really interesting that I saw. Okay, so as you can see here, Walmart continues to grow revenue, and that is one of the key things we want to continue to see here. We want to continue to see revenue growth, and as you can see here, they recently increased their dividend as well. So as we take a look here, they posted a press release earlier this year. Walmart raises annual dividend to $2.16 per share. So as you can see here, they approved an annual cash dividend of $2.16 per share, approximately 2% increase. So guys, what does this mean? Well, they've been paying a dividend, increasing it for 47 years. So a company cannot increase its dividend unless it's increasing its revenue and increasing its net income, because otherwise they can't pay the dividend. They would either have to keep it flat or suspend it. So it says the Vice President CFO says, we're proud of our track record of returning meaningful cash to shareholders and are pleased to be increasing our annual dividend for 47 consecutive years. So you guys are familiar with dividend payments, how it works. You need to own the stock basically a day, 2 days before the record date. So that's the ex-dividend date. So you want to own it a day before that, and then you'll receive your dividend on these days, guys. So one of the easiest ways to buy stocks for the long term is to focus on companies that are constantly growing their dividend, because you cannot continue to grow your dividend unless you're doing things right. So as you see, with each share you own, you'll get about 54 cents per share. And this is a great way to reach kind of financial independence, retire early. And another thing I want to talk about as we go back, when I was going to mention, I was going to tell you guys about this, is yield on cost, right? So let's say you buy Walmart shares now, right? The dividend is currently $2.16 per year. If you buy shares now and you never buy shares again, 5, 10 years from now, they're going to probably continue to increase their dividend. I mean, if they've been doing something for 47 years, why couldn't they do it for 57 years? I mean, people shop at Walmart, period. So that dividend, if it's increasing around 2% per year, let's say that in like 5 or 10 years, that dividend is like $2.70, $2.80, depending on how well the business does. You bought the stock when it was paying $2.16, so now you're getting $2.80. So it's like getting an annual raise at your job, but you don't actually have to work for anybody. So I think it's a really powerful thing, and then that dividend, that initial purchase cost, you continue to earn a higher yield. So let's say you own Walmart shares for the next 20 years. You bought the shares at a current point of around what they're trading for in 2020. By 2040, that dividend should be a lot higher, yet you paid a lot less for those shares. And I'm not even talking about share appreciation, I'm just talking about dividend appreciation. Really powerful stuff there, guys. So as we take a look, we're going to keep going down back to the balance sheet. Walmart has plenty of money. They have over $14 billion in cash, and the company has done an excellent job of returning value to shareholders, over 81 billion in retained earnings, guys, and they're not diluting the stock, they're actually buying it back. So by buying it back, that means each share you own is worth more. And as you can see here, cash flow is awesome. Positive net cash flow, which is vital to basically pay back those dividends. As you can see here, dividends paid and purchasing stock. So they did slow those stock repurchases down a little bit, and that's because the stock is actually trading around an all-time high. But the fact that they're continually buying back shares means that you get to own more of the company without buying any more stock. Okay, and finally, I want to give you guys a quick kind of just a quick test of what you'll be getting. So over the long term, Walmart has returned around 7.8%, compounded annual growth, plus that dividend as well. So that gives you around 10%, 10% annual growth per year. And it's actually been accelerating in the past. As you can see here, Walmart's stock share price has been accelerating. So Over the last 15 years, 7%, then 10%, then 12%, then 18%, and 26% this year, and already up 6% year to date, while the general market is still down 8%, guys. So I think Walmart is accelerating growth because, as I mentioned in that earnings report, their e-commerce sales are exploding. So I think in the past decade, no one thought that Walmart was an e-commerce player, but it looks like they're starting to turn that around and compete with Amazon. And Amazon became basically one of the richest companies in the world based on their e-commerce dominance. If Walmart starts, playing into that e-commerce division and starts increasing that more and more and more, I think that Walmart could become a $1 trillion company in the future. So if Walmart's trading, so if Walmart starts really hitting that e-commerce platform, this stock price can go a lot higher. Of course, we have also the dividend and share repurchases. So right now it's trading at about $350 billion market cap. If Walmart were to continue to grow that e-commerce platform, I don't see any reason why this couldn't be a $300 stock in the future. We saw what Amazon has done with e-commerce, and Walmart is probably number two. Walmart is still the largest retailer in America, and if they can obviously become the number two e-commerce player if they really, really, really focus on this, and this will grow the stock price a lot. So like I said, guys, Walmart, another stock I plan to buy and hold for a very, very long time, well into my retirement. And I think it's just an excellent, safe play. Sometimes, I like stocks like Tesla, I like stocks like Roku, I like stocks like Netflix, but, sometimes it makes sense to buy these dividend stocks because, especially if you guys are nearing retirement and you want to receive those dividend checks can really, really help you when you stop working and perhaps you're living on Social Security and things like that. And if you buy the stock now, well before you retire, when you do retire in the future, you're going to be handsomely rewarded because you purchased the shares at a much, much cheaper price, and that dividend has been increasing, and you will be really surprised at how fast dividends can increase if you just hold on to the shares and just be patient. So guys, I hope you enjoyed this video on Walmart stock. For me, Walmart stock is an extremely strong buy, and I plan to buy more Walmart stock and add it to my retirement portfolio. If you guys are interested in setting up your own retirement portfolio, I use Fidelity. I live in the United States. You guys live outside America, you guys can check out companies like Interactive Brokers or something like that. So I hope you found value in this video, guys. So if you enjoyed this content, please give me a thumbs up and subscribe to my channel for more videos. I post videos on the stock market every day, so be sure to stay tuned for more updates. So that's it until next time, guys. Take care.